Thank you, everyone, for joining us for another fun-filled spotlight session. This week, we have Tony Bruce, who is a CPA. He's been in business for many years. He's also a real estate investor. He works with real estate agents and helps, people with their taxes and learning information about, how to do, taxes, basically. So I'm gonna let him go ahead and take everything over because I have no idea about this sector. So I'll let the expert be the expert. Tony, thanks for coming on.
Good morning, everyone. Good to see you guys. Thank you for the opportunity, actually. I appreciate it. And just to let you guys know, I know Joe through a resource group that he and I work with. So it's kind of cool. He talked about this spotlight, and I said, "Hey, if there's an opportunity there, I'd love to be able to talk to you folks." So he said, "Yeah, let me talk to some of the people involved, and we'll get this rolling." So I'm kind of happy about that. So thanks for letting me have you. Thanks for letting me be here. Let me just see a couple of things. Hopefully, you could see a slide now. Yeah. Okay. So a couple of things. As Lawrence said at the outset, I am a real estate investor as well. Now, I think if I understand the group here, predominantly you folks are realtors, which is great too. We're going to talk about a lot of benefits that realtors, being self-employed folks, can have as tax deductions. But I also wanted to give you guys some info as well as to when you're dealing with clients, then you're doing showings. Lawrence said he's going to be doing showings all weekend. So whether the person is buying their primary residence, their first residence, or if they're buying a second home, or if you really go up the envelope in the scale and people are buying properties as an investment, I'm going to try to touch on and highlight and then open up some time for questions at the end. So hopefully that makes some sense. Um, Basically, in my view, and especially as a real estate investor, real estate, even if it's your primary residence now, generally, real estate is in what I view to be the last great tax shelter. Now, for those folks that are selling to people who are buying their first residence or a primary residence to live in, what are some of the benefits of real estate? Well, generally, you're going to have an opportunity to write off the mortgage interest. And then there are some limited deductions, as you probably are all aware of, as far as tax is concerned. So when you're writing off real estate taxes as a deduction, when you're writing off the mortgage interest as a deduction, those are helping you to defer some of the gain down the road. And then what happens is hopefully the property over the next 20, 30 years increases in value. You all probably know that. Just some highlights for some of the new persons who are buying your properties. There's a lot going on in the world of solar and residential home improvements that have to be related to energy efficiency. So those are the big three or four areas when someone's buying their first residence. You always want to tell the younger folks or even the older folks, hey, listen, that mortgage interest is going to be deductible. The property taxes are going to be deductible to an extent. And don't forget to look into some of the new improvements that a lot of the government is allowing in terms of solar and things like also windows, finally garage doors, and even some of the types of roofing materials and the like. So keep all of that in mind when you're talking to your clients over the weekend so they realize that those are opportunities to shelter income. The system is set up to help folks own a home and to also help them subsidize the ownership of that home through tax deductions. So hopefully that makes sense for the traditional plain vanilla type person who's buying a home. Now, as far as you folks as realtors, primarily the realtors that I've always worked with over the years were considered self-employed. And as you're a self-employed person, what I'm generally referring to is you're more than likely receiving a 1099. And so there are some classic deductions that you folks are going to have an opportunity to take advantage of. In particular, the home office, in particular, vehicle, perhaps in this day and age, if you're still driving around and doing showings in that world, all of the expenses related to when you walk out of the door. Lawrence mentioned this morning he just woke up. What's happening is I want you to think about how am I an entrepreneur today? You're out there, you have to find your leads, you're using the MLS system, You're paying those fees in terms of the services that you have available. You have your vehicle that you're riding around in. We're all on a Zoom call this morning. So the technology, the computers, your mobile devices, all of those are related to your business as a realtor. And therefore, when you're receiving that 1099 income in the form of your commission or brokerage fee and the like, what is happening is you're allowed to offset that income with those expenses. So when you wake up each day, basically you want to think about how is what I'm doing related. You may have particular magazine subscriptions where you're trying to look at the latest styles. You're trying to look at how you might want to stage a home for a viewing and so on and so forth. If you're dealing with investors a lot and you're meeting with banking folks, trying to help them solidify their mortgage opportunities or their financing, you may have subscriptions related to that. You may be meeting up with someone at the Starbucks and you're having a coffee. Here's what I would caution you about. Throughout your day, unfortunately, in the world that we live in, the legal world that we live in as it comes to taxes, it is substantiation, substantiation, substantiation. Just like you folks would preach to me, location, 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 I'm going to preach to you substantiation, substantiation, substantiation. Taxation is the only area of the law where you are, I hate to use this word in a sense, to make a point, guilty until proven innocent, right? Everywhere else, the government, the folks that are coming at you are required to prove what you did wrong. However, in the tax world, we are required to substantiate our deductions. So when we're using a vehicle, this is a classic example, classic IRS, New Jersey, Pennsylvania, New York, if you're selling homes in Florida, Hawaii, wherever you are, classic example, if you're using a vehicle, the IRS is going to say, show me your mileage log. And that is a requirement for having a vehicle deduction. Now, that may sound silly, but what they are looking for is substantiation, corroborating evidence. So what they're going to want to see is they're going to see the email or the text that Lawrence sent to me today. They're going to say, hey, okay, I'm meeting you at 123 Main Street, Tony. We're going to show you that great office building in downtown Haddonfield or downtown Newark, or I'm showing you that home in Short Hills or the home in Cherry Hill, or wherever you folks are located. And I'm going to meet up with him. So A, I'm on his calendar. B, he's given me preemptive corroborating evidence. And C, when they come back and say, well, Lawrence, man, how did you drive 500 miles on March 7th, 2024? He's going to have that corroborating evidence. He's going to have a calendar. He's going to have communication with the client or the banker, whoever he's meeting up with. And then he's going to show the address that he traveled back and forth to. And yes, he's going to do that all from his home office. And since his home office is his administrative office for what he's doing, the minute he walks out the door until the minute he comes back that night, generally those are considered business miles. So hopefully that's a really clear example of what we're talking about. Does that make sense, folks? Everybody want to chime in, raise your hand. If someone has a question at this point, I'd be more than glad to entertain a question just to give you a sense of how you're working each day as an entrepreneur, as a realtor. No? Okay,
Yep.
that's cool. Good. Go
Makes
ahead.
sense.
Good, good. So same thing with your mobile devices, same thing with any of your subscriptions. You want to have third-party corroborating evidence. If you go to a conference in Atlantic City, I believe you folks are all mostly in New Jersey, when you head to that conference in Atlantic City, or you head to the conference in New York, or if you happen to go into Florida because you're going to expand your horizons and you're going to start offering opportunities for people that are getting out of New Jersey or want a second home. Again, when you're traveling for business, you want to document what you're doing. The tax law loves continuing education. The tax law loves conferences, right? And here's what's really cool about a conference. The tax day in a conference is approximately 4 or 5 hours, is what the rules say. If you've conducted business for the majority of 4 or 5 hours, then you've solidified what's known as the business day. I don't want to step on anyone's toes politically, but think Doge. Doge would maybe take issue with that, right? But we're all entrepreneurs anyway. I tell people all the time, I work a half a day, 12 hours, right? So you're at a conference, you fly out of Philly, you fly out of New York, wherever you're going. And let's say you go down to Florida or you're going, I used to go to a shopping center conference out in Las Vegas all the time. in May. So I fly out to the International Shopping Center conference. Well, that day, my travel is considered business, the cost of travel, the hotel lodging. And I would actually meet with some potential clients that first day out there, even though the conference didn't start the next day. And I corroborated all of that with emails, phone calls, text, and things of that nature. So we had third party information. So that's the kind of substantiation. I'm not trying to create an accounting nightmare, but my suggestion to you would be, my advice to you would be, let's keep these documents going throughout the day, because the IRS loves, they get nervous when documents are perfect, right? They love messy entrepreneurs like us. They like to see sporadic entries in your calendar. They like to see that maybe you missed a day or so in your calendar, or you wrote up a bunch of different appointments in your calendar. They like to see multiple emails. If the records look too pristine and too perfect, they actually get suspect of that more than when they get, you know, you don't want to show up with a shoebox in this day and age with all the technology. But at the same time, they also get weirded out on the other end of the spectrum. So there's this fancy rule called contemporaneous, right? And all that means is as you go. So what you're supposed to be doing is you're supposed to be documenting your business effort as an entrepreneur as you go. Now, that could mean you could do it on the weekend or you could do it a week later, but you don't want to be creating your records for your 2023 tax return or your 2024 tax return today, right? That's not what the preferred method is, especially after you get the letter from the IRS that says, hey, we have a question about your 2023 tax return. We notice your travel expenses were a little bit higher than usual. We want to look into that. You don't want to be creating those records today, 2 years later, to go backtrack. So my suggestion to you is, it's kind of like when we were kids and you were in school and you were doing homework and the teacher say, hey, you know, practice your math once or twice a day instead of trying to cram your homework in all 3 weeks later when a test comes. It's the same kind of concept, right? If you can create these little bit of record keepings throughout the day, little text on your phone, I would suggest highly when you're using your iPhone, your Android, use your calendar. Plug things in. I plug things in my calendar all the time. Hey, I met with Lawrence today. I met with Joe Delavecchia today. We're doing this, we're doing that. And I make a little note in the calendar. And sometimes that's it. It takes 2 or 3 minutes. That appointment's on my calendar. Maybe he and I shared a text message and so on and so forth, or even more. So that's what would be my comment about record keeping. Um, any other questions related to you guys being realtors? Something you always want to ask: is this a tax deduction, or how do I do this at this point? Because then I'm going to jump over to talking about perhaps some of the benefits if you're talking to somebody, whoever comes up and wants to talk about, hey, I might want to consider buying a second home or rental.
I have a question real quick because you were saying about keeping track of emails or text, actually text.
Yeah,
What's the best way? I mean, yes, we can always go back in our text and show a record of them, but is there a way for us to not have to go back and search? Like, should we be putting our text somewhere or
I
organize them in a certain way?
I do, Hi, Jennifer, and I
Hi.
believe that's who this is. Nice to meet you. What I generally do is I take screenshots and I stick them in a folder on my phone, and and then a phone synchronizes to OneDrive. That's what I do. So, like
Nice.
Jennifer,
Okay.
if you want Jennifer and you and I, you know, I don't want to be doing it every 30 seconds, but for example, suppose you were going to show me a property this afternoon. You sent me a text and he said, hey, Tony, are we still on 1 o'clock? I'm going to meet you at 123 Main Street. And I say, yes, Jennifer, I am, and so on and so forth. Looking forward to talking to you. And I did receive the fact sheet of the property last night, so I'm definitely interested. That one little transaction, I just take a take a snap, take a screenshot of it, put it in my OneDrive, and then I have it syncing up. And I'll have 2024, a 2025 folder for March, and so on and so forth. That's all I do. It doesn't have to be any more sophisticated than that, but doing it as you go like that not only saves you stress, you're not going to miss something, but it goes a long way to having those documents available for sure if something ever came up. Does that make
Got it.
sense?
Yes, very much so. Thank you.
You're welcome. Anyone else have a question like that?
Yeah,
That's a
I have a
great
question
question.
here. What about some of these apps that track your miles? Uh,
Yeah,
does
Ash,
that
hi.
come? Mile
Absolutely, Ash.
IQ?
Hey, yep, Mile IQ is awesome, my friend. It's a gold standard. Awesome, 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 awesome application. It's a gold standard. For those folks who are not familiar, Mile IQ also has a little bit, I hate to use the word AI in it, but it starts to track where you're going with GPS, and you swap left and right. And, I forget what it is nowadays. I think left is business, right is personal. And then it automatically, like that word, automatically sends you a PDF email at the end of the month that says this was your mileage for last month. You stick that in a folder and you're good to go. I'm a big fan, Ash, of Mile IQ. I think it's like $8-10 a month nowadays.
Yeah, something of that nature, but it tracks, and so that's good, right? They'll accept that.
Absolutely acceptable. And then what I also like to do, my friend, is I like to have my calendar that shows that when I did say that I went to a property today, and it does show up on Mile IQ, or if I did say I met with a reference or a network source or a prospect and had lunch with them or had a cup of coffee at Starbucks, I also like to have my calendar show that appointment. I like to have two pieces of information. But Mile IQ is wonderful. It's the gold standard.
Okay, thank you very much.
You're welcome. Anyone else? These are great questions, by the way. Thank you so much for
I
asking
just have
them.
a comment real quick. That is a very, very good tip about saying to do it daily because like you said, we have something going on tomorrow, the next day, next week, next month. We're backtracking from, weeks ago, trying to put everything together. But when you track it daily, it makes things a little bit more easier. That was the very, very good. That was a good one. That was a good
Good.
one.
Glad to hear that. Glad to hear that. Okay.
I have a
Um,
quick question.
sure, go ahead.
So, you, so if I understand perfectly, it's 4 to 5 hours that it can be count as a work expense. What about if you're only showing a house for like 2 hours, or you
That's
just
o- that's okay because think about all the other stuff you're doing, right? You may be making phone calls to prospects. You may be doing some of your own research. You may be looking at market research. So actually, I think the 4 to 5 hours is a very, very generous. We all know, and I apologize how to pronounce your first name. Is it Odele?
ordeal?
Odile. I'm sorry. Okay. So yeah, Odile. I don't think 4 to 5 hours. Don't sweat that. 2 hours is great. If you do an appointment today and you spent the morning doing that appointment and then you had to get to family or you had to get to a doctor's appointment this afternoon or vice versa, you're okay. What I was referring to more so is when you're on travel, right? If you're on travel, that's where they get a little bit more particular, right? But usually, if we're traveling to a conference, you may have breakfast with a colleague, you may make some phone calls, you may do some research. So don't focus in just on the 2 hour appointment. Focus on what it took you to get to the appointment, and then focus on the follow up after the appointment. And I'm sure it more than fills up what you're looking to do. Does that make sense?
Yes, it does. Thank you.
Good, good, good. You're welcome. Anyone else? These are awesome questions. So let me just say one other thing, a little bit of self promotion. So the thing that, and I have a YouTube channel, so you guys are welcome to go out there and like it, subscribe to that. That's always a great opportunity. If you look me up, if you go to my website, if you search for Anthony Bruce CPA Cherry Hill, you'll find me. If you're also on YouTube, we have a YouTube channel and we have a podcast called My Tax Sense. That's on Spotify and all those. But here's what I want to say to you. My pet peeve with our industry is that it is compliance based, right? And so when I see these commercials right now, you know them, you've seen them. I don't have to mention any names. When they say, "Come to us and we'll find your deductions and save you dollars," that's okay. But Lawrence hit the nail on the head and he grabbed what I said at the outset. What we do when we work with our clients, we're working with you throughout the year. Generally, we are not tax prep and file. We are more proactive. So we get together with our clients at least 4 times a year, sometimes more, depending upon the size of their business. And what we do, as Lawrence just said a moment ago, not only do we set out a blueprint for you and how to do what you should be doing, like we're talking about now, but then we hold you accountable. So Odile, I'd say, hey, do you have, and Ash, I'd say, hey, do you ever, you guys are make sure you're keeping your mileage log, right? You're using Mile IQ. Let me take a look, and I hold you accountable. And I say, you went to that conference? Okay, let's double check your records. Or your home office. How are you keeping your home office? What does your calendar look like? These are the home office has to be used exclusively for business. So when you see these commercials about, oh yeah, we'll find your deductions, that's probably not the best way to do it, as Lawrence pointed out so well, just from human nature. I don't know about you, but I don't remember everything that I did last January of 2024, and I could miss a deduction. We have very busy lives as entrepreneurs running around, trying to take care of family, trying to earn money, trying to keep records. So what you do is by doing it a little bit each day, you're documenting, you're fulfilling your own substantiation requirements, so that when it does time to prepare your 80%, here's what I always say, and you're going to see this if you watch one of my podcasts. 70 to 80% of what our firm does happens before the numbers hit the tax return. Like right now, we're completing tax returns, and that's because we already have the data from last year. We're actually working on the first quarter of 2025 with our clients to make sure that they're on track to do things the right way. But 70 to 80% of what we do happens before we get to tax season, because we already know what the numbers are going to be. We've helped our clients with estimated tax payments. You folks are self-employed. You realize you have to pay taxes as you go. You just can't grab a 30, 40, $50,000 1099 for last year and show up and pay the taxes on that now. You're required to pay your taxes as you go last year, or else you're going to be subject to penalty and interest, right? So we're in a high interest rate environment. You guys feel that directly, right? You guys feel that directly in the form of mortgage interest rates. You understand mortgage, you understand the mortgage interest rates are expensive or higher than usual right now. Well, the same thing happens with the government. New Jersey, Pennsylvania, New York, California, the IRS. When you are not paying your taxes in a timely fashion, they charge you interest on the underpayments. And yes, I'm going to put my contact information right in here right now. Any other questions?
You guys have any questions? Everyone good for so far? This is all really good information, I think. What do you guys think?
Absolutely.
Yeah, it was informative.
Good. Okay.
Yeah.
So let me just jump outside the box a little bit, and Lawrence, feel free to interrupt me or stop me if you feel as though it's not pertinent to this discussion. So in case you guys run across someone, we talked about you being an entrepreneur. We talked about your everyday client who you're meeting with buying their first home. Let's take it this way. Let's dip our feet in the water this way. Let's say you have a client who's looking at a duplex, right? And they're a young family, or a single person with a child, or whatever the case may be, and they say, you know what? I understand real estate a little bit. I want to buy a place for myself to live in, but I also want to have a little bit of investment too. So let's say that they're going to live in one of the duplex units, whether it's side by side or top and bottom. Let's say they're going to buy that unit, live in one of them themselves, and rent out the other half. How does that come into play? Well, a couple of things. On the portion that is their principal residence, they're going to have those traditional tax deductions, like the mortgage interest, like the property taxes. But what really gets cool now is the tax code, and this is why I say it's the last great tax shelter. And this may even be something you want to consider for yourself as a realtor. Many of the clients that we have as real estate investors also happen to have been at one point in their career, or still are, realtors. Wouldn't it be cool if you can get the government to subsidize your ownership of that property, right? So let's say you get a duplex, and let's say, I'm just going to make the math easy. Let's say on the upside unit, which you're going to rent out, you want to live in the bottom. Let's say that you can rent that out for $2,000 per month. Now, all of a sudden, not only are you living in this place downstairs as your personal residence, but now upstairs, you're collecting rent, which is going to help subsidize your ownership of that property. Now, a couple of things happen. Wouldn't it be cool if we could take that $24,000 of rent that you're collecting cash, literally coming in, and make that disappear for tax purposes? That's why I say the tax code and real estate investing is the last great tax shelter, because you're going to be able to deduct the portion of the interest on the loan that goes towards the duplex as an expense for the business of operating the rental. You're going to be able to deduct the homeowner's insurance. You're going to be able to deduct a portion of the property taxes, right? So all of a sudden, number one, we have homeowner's insurance, which is a tax deduction on the rental property that wasn't a tax deduction on your primary residence portion. right? Now, all of a sudden, you get into a portion of the utilities. If they're not separately metered, maybe they are, maybe they aren't. But even if they're separately metered, the tenant upstairs, if they're paying the utilities, that's not a deduction for you. But if you're paying them, a lot of units are set up that it's one utility bill, old school heating oil, maybe in some cases, and things of that nature, repairs, maintenance of the property. And then last but not least, depreciation. And what depreciation does, it allows you to recognize your ownership of the property and expense a part of that over 27 and a half years if it's a residential property. So it's very likely that you could take the depreciation deduction plus the other deductions of operating the property, the portion that's related to the rental, and offset that $24,000 of rental income. So it's kind of a really cool environment to be able to operate in. Now, down the road, if you ever go to sell that property, let's say you want to move to another unit or you want to buy, let's say you move out of the bottom, now you rent the bottom, now you go to another home for yourself primarily, but downstairs, the second portion of the unit, you start to rent that out for another $2,000. Now, all of a sudden, you have this property kicking off $40,000 or $50,000 of rental income, and you have all the expenses related to that property: mortgage interest, property taxes, repairs and maintenance, insurance, utilities, and of course, depreciation, offsetting that rental income that's coming in. More than likely, you may be able to generate on paper a tax loss. But even if you didn't, and just trust me on this one, rental income is taxed in a much more favorable way than any other kind of income in this system. My compensation for my self-employment, your compensation as a realtor for your self-employment, if you ever had a job where you collected a W-2, all those types of incomes, compensation, are taxed at much higher rates, and they're taxed at employment taxes, unemployment, Social Security, and the like. Rental income, though, however, does not have those extra taxes on it. Now, let's play the devil's advocate. Let's say 8, 12 years from now, you decide to sell that property. If you want to roll that into another one, there's something called a 1031 exchange. Many of you may have heard of that before. What a 1031 exchange is, you basically kick the can down the road. You can defer whatever gain you have in the property and roll that into the new property. Finally, even if you don't want to and you want to sell that property and you want to cash out, that property is only subject to long-term capital gains if you've owned it more than a year. So there's a lot of opportunities in the real estate realm if you're working with someone. So I'm not trying to discourage you. If you're primarily used to dealing with single family homes, that's cool. But if you do come across that property where you might say, well, it's a duplex, don't turn your eyes so quickly. Maybe you have a particular client of yours who might be interested in reaching out a little bit, and not only just owning one portion of that property for their residence, but also as a rental property for the second portion of that, if that makes sense. So keep an open mind on that. And then last but not least, a really, really super technical point. You heard me mention that rental property depreciation is generally 27 and a half years if it is a residential property. If it's a commercial property, it's 39 years. So think of like an office building or, a strip center or something like that. But there's something special that you can do called a cost segregation study. I don't know if you guys ever heard of this, if you come across it in your work. But what a cost segregation study is, what it says right here in the slide. It breaks down and segregates the costs of the property, like the windows, the doors, HVAC, flooring, signage, fences, and things of that nature. And what it does is it allows you to increase the depreciation on that because you depreciate it over a shorter life period. So there's a lot of opportunities for and why people, maybe you hear some stories, and partially some of them are true. Again, talking politics, but not right. What I do, a lot of taxes, policy is tax, and politics. Maybe there are reasons why someone like a Donald Trump or Jeffrey Bezos or whatever, they paid limited taxes on their income, because if they're investing and utilizing the laws that are available in the form of depreciation and rental income and things of that nature, they could build out a portfolio and generate and shelter a lot of that income, if that makes sense. So, if you have any questions about that stuff too, you can shoot them out, or if you ever come across those, maybe you want to consider now, hey, that duplex, maybe it is something that I want to show to a particular client and consider investing the upper side of that, if that makes sense. So hopefully that helps and didn't go too deep into. I try not to be super technical. I tried to glance over it to give you an idea for, marketing yourselves as well in case you come across any other investors. Any questions on that stuff, or does anybody have any thoughts about that? Have you ever dealt with anything like that before?
That was a really good idea and a good explanation on how to, defer taxes into becoming not only like a homeowner, but also an investor and begin to build a portfolio that way. I thought that was really, really top notch. And it was like a really broken down in a good way that was like pretty fairly simple to understand and to apply should you so choose to. Do you guys have any questions? My brain is like going a million miles a minute right now.
I did put my contact information in there. And like I said, you'll also find me on YouTube. Let me see if I'll get you a YouTube link as well. You're welcome to subscribe to that. It's all free. I just like to give this information out, to folks. So let me see if I could let's see.
Awesome. Do you guys have any questions, comments, concerns?
I just have a question about if we wanted to seek Tony to help do our taxes, like what is typically the cost, and then what we end up bringing to you, especially if like I'm a new realtor, I haven't been in this for very long, so I started tracking some of those things like mileage and all those things, but in
Mhm.
a first appointment, like do you bring a whole thing of stuff to you, or what's all involved?
So Jennifer, great question. So being fully transparent, we generally just don't prepare and file tax returns. So you mentioned cost. So generally, what we ask for is a 1 year commitment, right? So we're not going to be the place that you show up and we give you a bill for $500 or $600 or $700 to file your tax return or whatever that number is. So we're going to ask you to jump on a subscription with us, get together more than once. And what that does is it helps to reduce your tax bill because the preparation of a tax return is just a cost, right? There's really very limited value in that, right? So that would be my first comment to you. We generally do a subscription service where someone gets together more than once. But in full transparency, what we do is first we build out a plan and give you the knowledge and the expertise. It's a living, breathing PDF document that's about 40 or 50 pages, most cases. And what we would do is we would take your old tax return, look at the numbers, look at the data. You'd say to me, this is what I think I'm going to earn as a realtor. And then we'd project out what your tax world would look like for 2025 and beyond. And then last but not least, in there, Jennifer, is where it talks about how and what you should be recording, what you should be doing. And that's where we give you the list of documents that you would bring to your first appointment, if that makes sense.
So then my question is, I can come to you to set up for my 2025, but I should try to go to someone else for just to finish up my taxes for last year. Or if I
Yeah,
sign up
that
for a
would be,
subscription, you might be able to
yeah,
help with that still.
I would. It depends on what your situation is right now. We're really, and again, I'm being really honest with you. It's March 7th and things are really getting we've had people we've worked with for the last 15, 18 months and their appointments, they've been scheduled, they're in the calendar. I'd be more than glad to talk to you. Let's set up like a Zoom appointment. You and I could talk no cost for about 20 or 30 minutes, 40 minutes of your time. And if it's something I think that we could do for you for 2024, we can. Otherwise, you could still go to your prior practitioner, and then we could start working together going forward in 2025. Does that seem fair?
Sounds good.
Okay, cool. All right.
Good. Good, good,
Any,
good.
that's a great question, Jennifer. Thank you.
Jen always comes with the good questions.
Mhm. Anyone else?
Anyone else have any questions? He's going to put all his information in chat. I think he did already. I think he's putting his YouTube channel in the chat.
I am, Lawrence. You're right, buddy. That's exactly what I'm doing. There you go.
And
So
then,
that's probably the fastest way to change it. It's at Anthony Bruce 3482. Yeah.
got it. Okay. All right, everyone, make sure you copy and paste all your information right here that's in the chat. Someone is asking, how much is the subscription?
So it depends, Ruby. To be truly transparent with you, it depends. Um, Transparent, we generally don't start for less than $2,000 per quarter.
Hmm.
So that it really depends on what level your business is at, what your book of business is with being a realtor and all that. But you'll go to someone and they're going to charge you $7, $800, $1,000 to prepare a tax return, and on the surface, that seems like okay, that's cheap, that's affordable. What I'm here to tell you is generally the folks that are doing that, you're just sharing the bill with the government. You're paying probably $6,000, $8,000 in additional taxes that you wouldn't otherwise had we been working with you on a planning basis. So then what it becomes is like you're saving money on what we're doing. So at the end of the day, it becomes cost effective because you're not paying and overpaying your taxes.
Hmm. That makes sense. Good question, though. Mhm.
Yeah,
Okay, thank
excellent
you.
question. Yeah, I like to be really transparent about that. And thank you, Ruby, and thank you, Jennifer, for asking those questions for sure. But I've been doing this since, like I said, I've been doing it this way since 1999. Joe knows me. Like I said to you, there's a bunch of people out there. You can go to an H&R Block or a Jackson Hewitt or the person up the street who may even be a CPA or an enrolled agent, and that's fine. And what they do is they built their businesses around volume and doing a bunch of tax returns. What we do is we add value and we have an educational environment as we go so that you have a better idea how to go forward in terms of being tax efficient as a realtor, and then therefore saving you money in the long run, literally saving you money in the long run.
Hmm.
What is your link to podcast?
Just I'm sorry, right there. If you go to the YouTube channel, Anthony Bruce 3482, it'll shoot you over to the podcast as well. It's all encompassed in that one portal. That's the way to do it.
Cool. Awesome. Anyone else have any more questions, comments, or anything? I thought this was a really good spotlight. I'm happy that you came on and gave us a great breakdown of everything.
Thank you
I,
so much
I
for
learned a
having the
lot
opportunity.
today. I hope everyone else learned a lot today as well. We'll definitely have you back on because I can see you being a reoccurring guest here as tax things, tax laws change and things like that. We definitely would love to have you back and have you on to, run us through some explanations on what's going on and things like that, and we
Yeah,
can
yeah.
totally reciprocate the relationship. So that would
So
be great.
just real quick, I put my email address in there. If you have a question you want to shoot off, there's no cost to that. It's the best I can do. I'll try to answer your question. Also, just remember this too. Again, don't shoot the messenger, but you happen to have an administration and a president who is real estate friendly. So if you can get beyond some of the stuff that goes on, the noise. I don't want to call it the noise. I know it's real to a lot of people, but you're in an environment right now where you have a president and an administration that built their world around real estate. So I suspect that we're going to have some really good opportunities in the real estate market to continue as far as the tax rules are concerned, or whatever that's worth. That's just my professional opinion doing this stuff for a bunch of years.
Thank you for that.
Yep,
Anthony, I had a quick question as well.
sure.
So there's a lot of laws changes every time about what can we deduct and what can we not deduct. So to be heads up, like starting January, February, March in the
Okay.
real estate agents,
Yes.
where can we go and quickly look at what are the things we can deduct and what are deductible for realtors? Yes.
So again, I would go to our website. Frankly, you're welcome to. It's all free information. I would go to the YouTube channel. I discuss all those kinds of things.
Yes.
Um, Yeah, and again, there's no list. So here's the thing. This is Ruby, correct? Is that who I'm speaking
Yes.
with, Ruby? Okay. Yeah, so Ruby, here's the thing, right? Everybody says, what can I deduct and what can I deduct? You know
Mhm,
what the answer is? This is really frustrating, but the
mhm,
official legal answer is anything that's reasonable, rational, and logical. So
mhm,
here's my point. You may have a realtor who is a jet setter, right? And literally they have to fly back and forth between New York and Florida.
mhm,
Their NetJet subscription, all those kinds of expenses are deductible because it's reasonable, rational, and logical for their book of business. You may have a realtor who's a part-time person, who is a school teacher, and whose spouse works as well as a police officer.
Mhm.
That realtor's tax deductions are going to look vastly different than the realtor who is showing properties in Miami Beach that are worth $40 million. So the true answer is,
Mhm.
when you're sitting down today, Ruby, in your workday, how is what I'm doing related to me being a realtor? And how potentially is it, what is it costing me? And is this potentially a deduction? So if you go to the local pasta place or the local pizza place, or you go out to Starbucks this morning and you meet with someone and you just talk to them for 5 or 10 minutes and say, hi, if you're ever thinking about purchasing a property, keep me in mind. That coffee or that muffin this morning is deductible. That lunch, if you're meeting with a resource that is going to refer to you, that is deductible. Some of the stuff is like you're on your phone right now, you're on Zoom. A lot of the stuff is, again, how is this related to what I'm doing? There's no magic list of what's deductible or what's not deductible. It's more about what is this expense and how is it related to what I do? So for example, you may be a specialist in a particular community, right? And so therefore you may advertise in that particular community, or you may appear in that particular community's events on a weekend, or in their spiritual sessions or religious sessions or whatever. So
Mhm.
therefore those would be related to a tax deduction as it relates to your book of business. Does that kind of make sense? That's a non-answer, but it's the real right answer. I always answer it the same way. How is it reasonable, rational, and logical in your business? And I use that jet as an example. Again, someone on this call may be someone who's selling $3 million properties, and people are jumping back and forth between the Hamptons and Miami Beach. The NetJet subscription at $1,400 a week is perfectly deductible. But again, if that part-time realtor is just trying to subsidize their income and they're a full-time teacher and
Mhm.
their spouse is a law enforcement person, then that NetJet subscription is probably not realistic for that person. Does that kind of give you a sense of what I mean?
Yes, Anthony, that's excellent explanation. Thank you so much. Because our CPA for always what they have been saying that, okay, your income is this much this year, you cannot deduct these many things. But like in COVID and other places, even though we were trying, we were driving, we were writing 10 million offers to one property, we were still not able to make anything that
Right,
year.
right.
And he is saying, because you didn't make anything this year, you cannot put much of deductions. So they
Right.
go based on, just to play safe, how much you made that year.
So there's a lot of wisdom there, though. So I gave you the facts, and then there's some wisdom too, Ruby.
Mm.
Then I would approach you and I'd say, Ruby, listen, it's reasonable, rational, and logical. If you could substantiate this, they're all valid deductions. But I would also caution you that the IRS may take a special look at that, right?
Mhm.
And how willing are you to go through an audit? And an audit is an arduous process. Even when you're right, sometimes it's not worth it. So
Got-
you mentioned COVID though. COVID was a very special time. There were a lot of people not earning money, and there were a lot of deductions, but there
Mhm.
were also a lot of tax benefits that were available during COVID that are no longer available now. But
Mhm.
you make a good point, Ruby. It's never black and white. There's a balancing act.
Yeah.
And so I always give my clients, I say, yes, we can deduct all these things, and your income is going to be a minus $60,000. And then the IRS is going to say, well, how do you live? And if we're willing to go through that process and be prepared to answer those questions
Mhm.
honestly, then I'm willing to back you up and sign the tax return. But I also caution my clients. I give them some wisdom. Just because you can deduct it doesn't mean you want to, is what I heard your person saying, and I respect that. I don't know your whole situation, right?
Great. Yeah, no, that's a perfect answer. Thank you so much.
You're
I
welcome.
really appreciate. Thanks.
Sure. All
Awesome.
right.
This was
Awesome.
great. This
I
was a
man, this is
great,
exciting. This is exciting. This is the stuff I love to do, right? Nobody wants to fill out forms, right?
yeah. Right. This was another great spotlight session. Thank you, Tony, for being our guest this week. I really appreciate it. Thanks, guys, for coming on. I also appreciate it. I hope to see you guys around the office. We're having a watch party today at 11. Feel free to stop by if you would like. We still have plenty of party supplies from our last event. So come through and have a drink on us. Hopefully, I'll see you guys all then. And if not, have a great weekend. I'll see you guys all around the office sooner or later.
Thank you again. Thanks for having me. Have a great day, everyone. Be safe.
Awesome. Have a great
Thank you,
day.
Tony. Thank you,
Yep.
Lawrence.
Thanks a
Bye-bye.
lot. Thanks, Joe.